Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, thank you for joining at the live stream yesterday. It was awesome going through all the details I did in the markets. As usual on this video, I will keep it fairly brief, but focusing in on things that need to be discussed. I would suggest that you watch the first hour of the live stream yesterday. There was a lot of detail there going from the equity markets to interest rates and beyond. So I would definitely go and watch that as well. This will give you full context if you didn't already see this. But as we come in today, it's Thursday. We've got claims coming out, continuing claims. The claims are expected to show a 750 plus new claims. On the continuing claims, we're looking at around 4.4. As I continue to talk about this number, I don't think it's material at the moment, but with the employment numbers coming out on Friday, everybody's going to be focused on that. As we look at the reports that came out yesterday, ADP came in at 117, well under where it was expected to come in. And we also saw ISM non-manufacturing miss as well. So the economy continues to give us this mixed picture. And the interesting thing is, in spite of all the rhetoric around the stimulus bill, we continue to see the stalemate that we've seen for a while. As I mentioned in last night's video, there's only about 9% actually directly related to stimulus. Everything else seems to be pet projects. And now the GOP has sworn to fight this thing tooth and nail to get rid of a lot of these projects. So here we go again. I warned you the other day, is what if this thing gets strung out for multiple months? And it looks like that's where we're headed. They passed a bill late tonight again, so they're working late to get a lot of stuff done, but we still have to see this stuff go through the Senate, and that's been the bottleneck for some time. So this is the issue that I want to bring to you, is we're seeing the market sell off pretty heavy overnight, and part of that is about this, I believe, is that this stimulus is not coming out anytime soon. It's going to continue to get kicked around until it can't anymore. I don't know how long that is. It could be literally months again, like I said last night. So the question is, if the market was bid up primarily to the vaccines and then stimulus, well, the vaccines are out there and getting rolled out. The administration says that there's going to be enough for every adult by, I think it was May or June, which is ridiculous. That's around 209 million vaccines, roughly. That's for folks over 18 and over. So there's just a lot of stuff that's being promised. It doesn't look like any of this stuff is actually going to come. So this is the problem as far as I'm concerned. As we go forward and these things aren't being satisfied, if that's what the market sentiment was based on, then we're in big trouble, because this is not working out. And then the other thing that we're seeing is, the big story has been for a while, is the ARK Investments, and their innovation fund is just melting down right now. It was down another 6%. I believe it's about 15-18% off the highs just in a couple of weeks. So they're full meltdown mode in a lot of these upper end stocks. I went through a lot of detail yesterday in the live stream, just talking about some of these situations that are unfolding in that big growth, high tech sector. We're seeing a lot of these stocks that came out, IPO'd, and rallied sharply are starting to actually come apart at the seams. And there seems to be some serious structural issues with these companies, because no one knows who they are yet. They just came out. There was a lot of folks coming into them, but now we're seeing it unravel, and it's making people nervous. In the live stream yesterday, I talked about the 10-week moving average being solid support overnight. We've taken that out. I'll go through the details here in a minute in the technicals, but it looks like we've got lower targets yet as this thing is getting legs on the downside. And this is just going to be relative to everything I just discussed, disappointment in the markets and nothing to look forward to. I've been talking about this for multiple videos now. So let's go ahead and take a look at the charts and see how they're setting up for Thursday. As we review the WaveTech database, after yesterday's sell-off, we did not get as much selling as I was expecting. There was just a slight ratio to the downside. We saw about 450 sell signals, about 380 buy signals, so it was slightly negative, but not by much. The bullish percent went from 31.3 to 30.78, so we're still above that 27.5 number. So the next couple of days are going to be really critical as we come into Friday. So in tomorrow night's video, I'll set this up the best that I can. But there's very little to talk about here since we did see some stabilization at this 27.5 level. That has been the low so far, and that is the key number. So we'll continue to watch this database very closely as we go forward. As I review the S&P 500 futures, we've had a pretty wild night. We're trading at 37.99, down 17 handles on the night. We were down to 37.77, which was 22 handles lower. So we've seen a pretty decent rebound. We're seeing good volume in the futures, 132,000 right now. And the S2 was 37.79. So we printed right to the S2 number, just below it at 37.7750. So we're seeing a lot of this action overnight, and we're starting to rebound here as we're getting closer to the London opening. A lot of the weakness has dissipated. So we'll see how we come in the morning, but it does look like we may have already satisfied on the futures the range. The upward end of the range is 38.34 is the R1. So we're likely to see that S2 is already printed. R1 at 38.34 should be the ceiling of this market for the day, and that would be about 15, 17 handles on the upside for the session. Above that is 38.54. Going to the SPX, we did see the market trade down just about to the RTX number, 3809.83. The low is 38.18. We traded just between S3, STX. So we're definitely seeing some follow through. The PPMs are starting to accelerate on the downside. PPM1 is now in trend mode down. This tells us we should have some resistance at 38.32 and then 38.47. The key level will be the 10-period moving average, which is dropping about 10 handles a day at 38.73. But as we look at the grid for today, probably on the cash, we're going to be looking at a potential for an S2, which would be 37.92. If we got through that level, we'd print down to 37.77. That would equal what the futures did overnight. On the upside, 38.32 is going to be the pivot. Above that, back to 38.47 as we stay in this 38 handle. It's possible that we're going to rebound back toward that 40-period moving average, which is right at that 38.43 level, which is the R2 number. So we could see a pretty volatile range today between R2 and S2. As I review the SPX weekly chart, the 10-week moving average, which I discussed yesterday, is 38.26. We closed just below that yesterday. As I mentioned, we are seeing some follow-through on the futures overnight, so this could set the tone for a further move down, and the potential for the market to trade down as low as the 36.92 level. I do not have confirmation that that's happening, but that would be your next major support, and it would be closer around 3,700, 3,708 is going to be a number that's going to come into play. So we can also see this on the market grid for this week, is that the S3 is 37.45, STX 37.25. So that would be the extreme end of the range for this week. The PPMs are still in trend mode. I talked about this a lot in the live stream yesterday. It's going to be critical as we come into Friday that we remain above that 38.26 level. The next market I'll cover is the NASDAQ. Overnight, we're seeing the NASDAQ was down over 1%. It has also bounced. We've been down to 12,511. It's currently 12,570. So we're back to the 21 period moving average, 12,595. I discussed this number in yesterday's live stream, and this is going to be really critical. This is the weekly chart. So what we're seeing here is a lot of momentum being lost on this uptrend. So let's flip over to the daily chart just to get the short-term handle on what's going on here. And you can see here, we can see here that yesterday we did get a close below the 12,695 level. It was 12,681. We did get an STX buy signal, which suggested a couple of days sideways. So this may be a positive as we come into the end of the week, so we don't get a close underneath that 21 period moving average I was talking about on the weekly chart just a minute ago. But this market is definitely under pressure. We're in full-blown downtrend. PPM 1 is a minus 0.81, PPM 2 minus 0.31. Anything over minus 0.25 is a downtrend, so there's a sustainable downtrend, and the overhead resistance is going to continue to drop along with the R1 number on the daily being the most likely at 12,774. If we got through there, we could go to 12,878. We've already traded with the low tonight almost down to an S2. We got just below S1. 12,485 is S2. The low so far tonight is 12,511. So pretty much an S2 hit, similar to what we did on the S&P. But this is a very negative pattern and is likely to remain down. This is the second day in the pattern, is likely to be at least one more day and the potential for 2 more sessions. So 3 more counting tomorrow going into Monday. We'll see how this thing finishes out, and I'll cover this in detail on tomorrow night's video. The final market that I'll cover is gold. Gold continues to just move lower in the pattern. The downward targets now on a short-term basis look like we could go as low as 1687 down to 1654. I'll make that a little clearer here in a minute. I reviewed the weekly chart, but we're definitely seeing this thing continue down. PPM 1 and 2 and 3 are all in trend mode down. Of the moving averages are going to continue down for at least another 5 to 8 days. Possibility is going into a further acceleration to the downside if we get below the 1700 number. Looking at the grid for today, the low was 1704, S1 1706, R1 1724. So R1, S1, possibility of going down and printing under that 1700 number at 1696. Finishing with the weekly chart, we're seeing the weekly come into S2 is 1692. Below that, 1693, 1656 would be the extremes for this week. Just like with the daily, we're in full-out downtrends, confirmed downtrends in the metal, and we just don't see any signs of a bottoming pattern as yet. We'll probably have to go and look at some type of reversal pattern to occur or something else. But right now, momentum is clearly down, and we're going to see the pressure stay on this market for at least another 3 weeks minimum. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.